Well, it gives me great pleasure to bring on board Mr. Vinod Dasari, CEO of Royal Enfield, yes, RE, to talk about first performance for the quarter gone by, impact of the second wave, how exactly is going to be this financial year different from the last financial year, and also to understand which way the premium motorcycle market is moving. Mr. Dasari, fantastic to have you back on ET Now. Thank you for joining us. Mr. Dasari, I do not want to focus too much on the quarter gone by, because quarter gone by is actually history. What we must understand from you perhaps is the implications of the second wave. How is the second wave different from the first wave for iShare and for your customers?
So I think this wave is worse definitely than last time, because it affected a lot more people. I believe from the studies that I've seen, it's anywhere from 5 to 10x number of people got infected, and lot more deaths than last time. So the fear is there. For the first time, you don't see migrant workers just walking in hordes and going somewhere. Actually, they're staying put and not coming to work, and they are also afraid. I think the only solution to this is vaccination and vaccination. And even after vaccination, people have to maintain their safe distance. This time around, I think businesses have learned how to take actions ahead of time. So everybody was better prepared from a business standpoint. But still, the virulence of the virus was so bad that unfortunately, we also lost 2 employees. We've had quite a few cases, but all recovered. We had 2 cases where employees passed away, unfortunately. Suppliers are also struggling. So I think this has gone up very fast, but it's coming down equally very fast. Even in Chennai, which was the last of the major cities to get it, it's now coming down. I just read a report today that bed availability is now getting better in Chennai. So hopefully by another week or 2 weeks, it will be all gone, and then we will continue the vaccination speed so that when wave 3, if at all it comes in, everybody is much better prepared.
Well, the reason why I don't want to focus too much on the quarter gone by is because your forward-looking commentary is very positive, and markets and shareholders always look at what is the way forward. So that's the reason why I'm saying that we perhaps should focus on the way forward. But just to get understanding of the quarter gone by also, Mr. Dasari, you managed to navigate the commodity challenge, some would argue. While on the net picture, the margin was down, but do you think that was a function of uptick in commodity prices?
No, I think, first of all, the quarter gone by, if at all there is one thing to focus on, it's the fact that we learned how to bounce back very fast. And hopefully, as the pent-up demand catches up again in the next quarter or so, we will bounce back equally fast. Having said that, when you look at commodity costs, we did offset it with price increases, about 3 to 8% price increases. On the precious metal side, we actually did a lot of work to reduce the consumption of precious metals significantly, especially on rhodium, where the prices had gone up almost 10x. I think from the original BS6 engine to now, we are almost 60% lower in terms of rhodium consumption.
Fair point. Mr. Dasari, the management expects that the production challenges are behind them, and you expect demand to stabilize. Let's spend some time trying to understand. For the quarter gone by, you clocked about 2 lakh units, and you're confident that you would do about 80,000 units. How will you achieve this number, given that right now there is a disruption in supply chain? The supply chain of auto companies is quite complicated, and a little bit of disruption here or there could have an impact on demand and the production. But you're confident that both will come back?
Absolutely. I think this time bookings everywhere fell, unlike last time. This time the bookings actually fell because it went into the rural areas also. So everybody's worried, where will demand come from? But fortunately, we have a nice pent-up demand from our international operations. We have a huge continued backlog that we are carrying forward in the domestic markets, as well as certain new production that we have to make for launches that we are doing. So as such, our order books are fairly full. So we just need to ramp up our production as fast as we can. And we learned how to do that last year. So hopefully, as soon as the supply chain starts to come back a little bit, and our teams were working with all the suppliers, learning from last time, we did develop some alternate sources, we did develop some sources closer to home, and so on. So hopefully, we will recover or bounce back at least as fast as last time, if not faster.
There's a time when iShare used to proudly report a margin of 30% plus, north of 30% plus. Now they're nearing 20%. Where do you think the mid-range for iShare would be? What is the new normal for iShare now?
It depends on, which type of the markets at that time we were serving. I mean, there was a time where we were only in the India market and only serving the classic model, and that had a very high margin. Slowly, commodity costs caught up, and some of the newer models don't have as much as the new high margin as possible. So I think 20% is too low. 30% is probably too high to sustain. Somewhere in middle is where we should be targeting ourselves, not by simply increasing the prices of motorcycles, but also looking at what we sell after the motorcycle is sold, whether it is non-motorcycle revenue, apparel, accessories. Those businesses are growing much faster. Equally, we used to be only 2% outside India. Now we are growing fast, and we are now at 8% outside India. And our target is to take it to about 20% outside India, where in many cases, in the developed markets, the margins are better.
How soon do you think you will be able to reach 20% from the overseas market?
We've set that target as, we didn't put a timeline to it, but hopefully by 25 or so, 25, 26. We've added network quite a bit, and we're growing very fast in many other markets. We entering new markets. For example, we became the first company from India, I believe, who has a dealership in Tokyo, in Japan, right in the middle of the heart of the automotive mecca, if you would. We are going to open a CKD plant sometime soon in Thailand, so that will help us grow faster in the APAC region. We're working on a CKD plant in Brazil and in Colombia. We opened one in Argentina. So this investments that we're doing, which got slowed down, I must say, over the last 12 to 18 months because of COVID, we will come back to it. So over the next 12 to 18 months as we do that. So some of this growth got postponed. It is not gone. I think, the advantage of a company like iShare is because of our strong balance sheet, we can afford to look very long term and make sure that we continue to do those things which are right for the business in the long run. And that's what we're doing.
The category which you represent, you almost have a monopoly there, 94% market share. But that's one category where a lot of existing players are now trying to step up their product offering. You've also indicated that this would be the most exciting year for you also in terms of the new launches. So for the category which you represent, the premium motorcycle market, looks like 2021 will be the most exciting, the most challenging, and perhaps the most awaited year.
Absolutely right. I mean, it is truly going to be a challenging yet super exciting year because we are launching many new products. And I like the way you say we are a monopoly in our segment. If you define a segment narrow enough, anybody will be a monopoly. I mean, on one hand, we say we are 90% of the market greater than 250 cc. But if I look at overall motorcycles, we are only at 6%. So our job is to convert more and more of those people who are riding smaller motorcycles and upgrade them to higher cc and better and more premium bikes. So that's how we have to create the market. It's not just a market share that we have today, but we keep expanding the size of the pie. And the way to do that is to offer a lot more products, lot better distribution, lot more digital transformation, lot more customer experiences which are unique, ability to personalize, great service. These are the things that we are focused on. And hopefully that will result in a much faster increase in the size of the pie.
A distinct example here, Mr. Dasari, is that Maruti almost had a monopoly market share and competition came in and they started losing market share, but they're still number one. So will you be worried if you start losing market share purely because competition is going to be launching products and there will be impact on the aggregate picture there?
Well, we don't generally focus so much on the competition. We are so focused on the customer and making sure that he gets a fantastic experience. Obviously, if a competitor comes, our job will be to make sure that we meet the customer's expectations and his ability much better. Remember, I was telling earlier also, Nikunj, that we are an inch wide and a mile deep. So if you look at just the Meteor, we offer 500,000 permutations and combinations. 500,000. So it's not like we also make a 350cc bike. That's all we make. And we are damn good at it. We are world's best at it. So, and we offer so many options and so many services so that the customer has a pure motorcycling experience. Somebody else might say, I'm the big daddy of, let's say, 100, 150cc or even a scooter, and I suddenly want to make a 350cc because it looks lucrative. It's not so simple.
Okay, fair point. Now, in your presentation, you've marked out a section which talks about your solution business and your non-motorbike business, which is also growing. How large is that business? Because I would imagine that that's a high margin business. You know, it's like Apple is now making $1 billion only by selling iPods, which are only made up of plastic and one semiconductor, which means margins are very high. So are you thinking on those lines, the solution business, the apparel business, these are businesses which would be low in terms of aggregate picture, but high in terms of margins?
Well, I don't want to comment specifically about margins, but Nikunj, as I talked earlier about, the Royal Enfield 2.0, which we launched about 18 months to 2 years ago, where we wanted to change Royal Enfield from being a 95% India player with one model, with one color and so on, to be 60% in India, 20% international, and 20% to come from solutions and non-motorcycle revenue. And these could be things like apparel, accessories, spares, financing, insurance, and so on, and a whole bunch of other solutions that we are working on. All of this, first hurdle that we cross is to say, whatever we do must make the customer experience better. If after that I'm able to monetize it, so be it. We don't just do it for the sake of making more money. In some cases, the margins are very good. In some cases, we do it even though the margins are weak, but it's great for customer to have it. He doesn't have to run pillar to post to solve a particular problem. So after he buys a motorcycle, they still need insurance, they still need finance, they need extended warranty, they need roadside assistance, they need apparel. They want to get this whole package financed. They have to do all of this anyway. Why don't I help them? And in that process, if I can make money, why not? This is my motorcycle. This is my customer. Why should I ignore them? Be part of their journey even after they have bought the motorcycle. And it can be quite lucrative also.
Okay. So what you're indicating to us, Mr. Dasari, are two very important factors. One, that in next couple of years, which is by 2025, 20% of your revenue will come from global businesses, which right now is in early single digit, and 20% of the business will come from the non-motorcycle business, which right now is also in single digit. These are two transformational changes which will happen in the journey of iShare or RE.
Correct. Give or take a year or two, because you don't know what is happening in the world right now. I can't predict exactly what will happen, but that's our goal and direction that we are headed up. We used to joke internally that, till we sell a motorcycle, we say hum saath saath hai. The minute we sell a motorcycle, we say hum aapke hain kaun. So let us make sure that we continue to be hum saath saath hai after the motorcycle is sold. So that's our mantra for participating in the riding experience of the customer and making sure that that is also improved. Not just the purchase experience, but the owning experience as well as the riding experience are also something that Royal Enfield can participate in and enhance.
When things normalize and when these regional lockdowns are lifted, do you expect the demand resurgence to be as strong as what we saw last year? Because last year, the demand in a sense positively surprised us. During Diwali, Dussehra, I remember most of the auto companies had run out of inventories, and there was a 60 to 90 day booking for REs.
Well, that is still there for us, but because we launched new products and all that, and the short-term blips up and blips down will happen, but I think there is a pent-up demand that will probably again get created because more and more people would not want to travel by buses or shared taxis or something. They would want personal mobility spaces. If we offer more options and better ability to purchase, better ability to personalize, I think we will have much greater penetration. For example, Nikunj, when we launched the Meteor, we also launched the Make It Yours, right? Which had so many options that people could personalize. Almost 90% of Meteor are sold where people personalize something. So that option is something where person says, I want this and I'm willing to wait for it because it's got my name on it.
Okay. There is the cash on your balance sheet now, as per the last financial year, stands at 7,700 crore, is increasing every year. That's the nature of the business. You're generating a lot of cash. If margins are coming down and if cash on the book is increasing, it automatically will have an impact on the superior return ratio, which iShare has always delivered. How are you planning to protect that?
Well, like I was saying, just focus on one model in one market, you will always lose margins over a period of time because of competition and because of commodity cost increases. So the only way to do that is grow in international markets, grow in non-motorcycle revenue, and in your core markets, launch new products so to combat this erosion of margin. So I believe that we are doing all three, and this will help us significantly reduce the erosion, and maybe we'll come back also. I believe we should come back in enhancing our margins once the markets start to come back. So I'm fairly confident of that. As far as the question was, what do we do with the cash? Yes, we have. I think now we have more than $1 billion in cash. I think last I checked, it was more than 8,000 crores. And it's continuing to rise. It's a good war chest to keep. We will find ways to, we had a good dividend also. So it helps us give us a strong foundation. I don't want to comment on exactly what we will do with that cash. Keep it for any capital expenditure, keep it for an acquisition, or give it back to the shareholders. All three options are available.
Mr. Dasari, if I do a channel check and if I talk about your peers, different category completely, for them inventory levels are going high and the penetration levels for, let's say, an entry level bike or a 125cc bike, I think is reaching its saturation. How far are we away from this kind of an saturation or high penetration level for the premium biking market?
I think there is a huge opportunity still, Nikunj. We are only 6% of the motorcycle market share. In our channel check, if you had done for Royal Enfield, you would have found that our inventories are very low. And that low inventory level is across all models of Royal Enfield, not just one or two.
Okay. My couple of last follow-up questions, Mr. Dasari. My next immediate question in a sense is about what is the best way in your mind to deal with if there is a third wave? Because the whole idea of dealing with the first wave and the second wave was very different. We had regional lockdowns, we had areas and pockets where the numbers were very high. Local government in a sense decided to adopt lockdowns. God forbid, but in case there is a third wave, what to your mind should be the best way to deal with it so that we don't we protect ourselves and the economic interests are also not compromised?
I think the best solution to this is vaccination. There is no other solution. But given the population we have, I don't think we can vaccinate everybody in time for even for a third wave. I believe that all governments, and I'm not being critical of one government and I'm not being political here, I think the lockdowns were very delayed. Even if you take Maharashtra, for example, where it all started, the lockdown is now, but I think we should have done it much earlier in March or something. As it's starting to come up, lock it down so that it doesn't grow. Because once it grows, then controlling it will be very difficult. Now, my worry is that if wave 2 was so much worse than wave 1, well, wave 3 will be so much worse in terms of the virulence and mortality of COVID. So I think we've learned a lesson, all of us, citizens, governments, everybody. I think we will all be a lot more cautious with wave 3, and hopefully we will not only do both vaccinations much more, but also take more proactive and early actions. I think this is where we missed the trick this time.
And just to wrap it up, Mr. Dasari, when we interacted with you exactly a year ago, you said, look, I'm at home and I've learned how to make aloo paratha. What's been the learning of the second wave for you?
Second wave, I must say, we just had continued these red talks. This is one way for us to connect. We've done a lot of things inside. We've got a COVID hotline where employees can call, and we said, everybody says, what can I do? Main kya kar sakta hu? I said, yaar, pick up the phone and call 4 friends who are in trouble. Call your colleagues who are in trouble. And so the red talks where we learned about aloo paratha, we now have children's stories being told by somebody. But one of the best talks we had yesterday or day before was when 5 COVID survivors talked about their journey and the information about how they survived, what did they do. Imagine one of our female colleagues who had an 8-year-old daughter who had to be kept in a separate room because the parents were isolating. So imagine an 8-year-old daughter opening the door and saying, hi. How do you deal with things like that? I think people only talk about the oxygen and the remdesivir and the medication and whatnot, but the mental portion of the mental health portion, the agony that people and families and especially young children go through is something that nobody talks about. So I believe this was great learning that it was shared by our employees about who survived this and talked about it to others. I think more of this needs to happen so that people see this as something that can be fought and come out of it well. It is not something that is only fear and despair that should be considered.
So true, Mr. Dasari. I mean, here's hoping and praying that we see end of this corona war very soon. The second wave, in a sense, has impacted all of us directly or indirectly. Stay safe, sir, and thank you for joining us. Your commentary, I guess, is quite inspiring. That got captured on Friday itself when the stock market reaction was not a thumbs up but a double thumbs up. This is an indication of the fact that everybody is endorsing the fact that RE is a powerful brand and iShares as a stock has places to go. Appreciate your time and thank you for joining us.
Thank you, Nikunj. As always, a pleasure.